notepad and a pen, you could get access to pretty much anyone in this world. My priority number one was to get Warren Buffett to do an interview with us. For a long time, he didn't do interviews with us. So I kept thinking, how can I get him to join? So lo and behold, a few months later, sitting there in Omaha doing an interview with him. The other person that we talk about a lot, who is Elon Musk. And I asked him the question about fear. And I said, you seem like someone who's just not fearful at all. He kind of looked at me funny and was like, are you kidding? I'm one of the most fearful people out there. My biggest fear is I just don't want to leave this earth and not have done the things I wanted to do and fear that.
Hi there and welcome to Stock Club, a podcast brought to you by MyWallSt. In today's episode, Emmett is interviewing Betty Liu. Betty, you might know from Bloomberg Television. She was one of the chief anchors before moving on to become the executive vice chairman of the New York Stock Exchange and chief experiences officer of Intercontinental Exchange. This was a great interview with one of the most impressive women in finance. Before we get into it though, I just want to give a shout out to our friends at Vodafone Business. Now, if you're like us here at MyWallSt, you'll know running business is difficult. There are countless things to think about. Some get ignored, some get completely forgotten about. That's where Vodafone Business can help. They've crafted a suite of tools and supports to boost your business's operation, and the best part is it's free for everyone. From cybersecurity to harnessing the power of AI, building a website or improving your team's work remotely, Vodafone Business will help you address the often overlooked but crucial elements for your business's success. To get started today, check out their one-to-one V-Hub digital support and advice service. You'll find everything you need right there. Find the link in our show notes or simply just Google Vodafone V-Hub for more.
Hello and welcome everyone, it's Emmett. Betty Liu is one of the most respected thought leaders on Wall Street. Every chapter of her career is distinguished. She's a highly accomplished journalist who for over 25 years interviewed leaders such as Bill Gates, Warren Buffett, Elon Musk, and hundreds more. She developed several broadcasting franchises, including Titans at the Table, which focused on business leaders, reaching over 340 million viewers globally. In the Loop was the highest rated morning show on Bloomberg TV, and Betty was its sole anchor since the show's inception in 2009. She's an entrepreneur, having built and sold a tech ed company, Radiate, to the ICE group. Following that, she was the executive vice chairperson of the New York Stock Exchange. She founded a SPAC called D&Z Media Acquisition, whose IPO is tenfold oversubscribed. She's the author of books. She serves on the boards of global beauty company L'Occitane and L'Occitane. You see how often I buy it, Betty. I can't even pronounce it. L'Occitane. And Robert F. Kennedy Human Rights. And today she is our guest on Stock Club, and I couldn't be more privileged. Betty, you're very welcome.
Emmett, so great to be with you. And I've been a listener of your podcast, so it's exciting for me to be on your show.
I've never had so many amazing headlines that I had to include in an introduction to a guest. I mean, honestly, when I was looking through your resume, I thought, yeah, I got to leave that in, or I got to leave that in. There was nothing you could leave out. There's so much to cover, but I'd love to start with the part that people got to witness, which was your career on Bloomberg TV. And you have sat in front of the most influential and successful business leaders of all time, and they've answered your questions. So I guess the first thing I'd like to ask you is, at a 40,000 foot level, can you tell me what you learned from this cohort of incredible individuals?
Yeah, I mean, I do consider myself, I'm very lucky that I had the chance to sit across from some of the smartest people in business. And also, it wasn't just the titans of business like Warren Buffett and Elon Musk, but really the range of people that I got to sit across, from government officials to entrepreneurs and everybody else on the spectrum. So I think that in and of itself is what initially drove me to be a journalist, is that, with a notepad and a pen, you could get access to pretty much anyone in this world. So in terms of what I've learned from some of these people, and in particular, people love talking about, Buffett, and obviously talking about, Elon Musk. What I learned about I would say some of the people that we talk about the most is that they're very much who they are on camera are very much who they are in real life. So, when I first joined Bloomberg TV, I remember my editor came up to my desk shortly, after I started and said, "We need to get Warren Buffett to join Bloomberg Television, and that's going to be your job." So that
Wow.
became my priority number one was to get Warren Buffett to do an interview with us on Bloomberg Television. And I remember that, for a long time he wasn't, he wasn't on camera with us. He didn't do interviews with us. And, so I kept thinking, how can I get him to join? And, I would send him letters. I would, call his assistant and, say, hey, Berkshire earnings just happened. Can you come on the show? And of course, every single time I did that, the answer was always no. There was really no incentive for him to want to do something for me. And so it wasn't really until I realized that I needed to sort of change my thinking when it came to getting him on television and to join me for an interview. So my thinking changed when I said, it's not what he can do for me, which is what I
Mm,
want, but what I can
mm,
do for him. And so I started to think, you think about people who are these billionaires, they've got everything, at their feet, they've got all the money in the world. But what can I bring them? And it's and it's interesting, they're just everyday people.
mm.
So, I started to look up, what is he interested in, he loves bridge, there's sports teams he's interested in, etc. And so, I sent him stats on the, articles about his interests. And it engaged him to the point that, I remember one day I'd sent him an interview request, and he sent me back a letter that said something along the lines of, not right now. And I showed that to folks, and they said, that means he's going to do an interview with you. So lo and behold, a few months later,
Wow.
I was flying off to Omaha, sitting in his Cadillac, seeing all his newspapers strewn around his office and sitting there in Omaha doing an interview with him. So I guess I would say that, getting back to your question what are some of the lessons I've learned, one thing very clearly is that, these are all people who are just like us, and don't be intimidated by them. Like, you can have access to them if there's some things that you can bring to them. And the other thing, and that they're also, I think, some of the best, some of the people that are the most, I think the most, quote unquote famous are, as I said, very much what they are on camera as they are in
Mhm.
real life. The other thing I would say about, the other person that we talk about a lot, who is Elon Musk. I knew Musk when, he was Elon Musk 2.0. I think we're now on Elon Musk version, 13.0 or something like that.
Yeah.
But I remember sitting in his office one time doing an interview with him, and I asked him the question about fear, because I believe a lot of our actions are based on, unfortunately, fear and greed. And I said, you seem like someone who's just not fearful at all. You just go straight for, for what you want to do.
Mm.
And, he kind of looked at me funny and was like, are you kidding? I'm one of the most fearful people out there. Like, I'm afraid all
Wow.
the time. And, he said, but what I'm really afraid of is I'm afraid of regret. And that's my biggest fear, is I just don't want to leave this earth and not have done the things I wanted to do, and fear that regret. And that really, that was that one micro moment. I call those things micro moments of, mentoring or coaching or whatever you call it, whether he meant it or not. That it kind of inspired me. I don't want to live a life of regret. I don't want to have that. I want to have that fear of regret. If there's one fear I want, it's that fear of regret. And that's kind of what propelled me to accelerate my career.
Oh, yeah. Amen. I mean, I think that fear resonates with everybody. I think anyone who's kind of the self actualization journey we go on, you don't want to look over your shoulder and have this kind of path strewn with regrets. And I think regrets are mostly what you didn't do, not what you did do. You learn from things you did that didn't turn out optimally. But that is a really interesting insight from a guy who's basically out to colonize Mars. If you're going to choose something, you may as well dream big, as Warren said. So, you've interviewed
Won't
so
have any
many.
regrets, I don't think. So
Well, you've so much to choose from, but did any single interview over your 25-year career especially leave a lasting impression? If you to just pick one.
well, I would say that, the interviews I mentioned, were really the ones that,
Hmm.
that had the most impact on me. And, oftentimes it wasn't what was said on camera that
Yeah.
was, that was important. It's what people told me off camera that was really life changing for me. People, what I remember one time, with Buffett, I think we were in Sun Valley and the cameras turned off. And I just said I said to him, Warren, I've just always had this burning question for you. And, he said, sure, go ahead, ask me. And so I said, what is it like to be really, really rich? I've never experienced it. I'm curious.
Yeah.
And, his answer was really, he said to me, look, um, being rich doesn't change who you are. It only makes you more of who you are. So if you're a kind person, being rich makes you kinder. If you're a jerk, being rich makes you even more of a jerk.
Wow.
And
What
I
a
thought that was
perspective.
so insightful. And I said back to him, I said, I'd love to test that theory out. So
There's still time. Well, you're like the
I'm
great.
still testing it out.
Well, listen, you're like the Graham Norton or the Jimmy Kimmel of business and investing. You've met more or less
He
everybody.
said that
Have
before.
you have you ever been have you ever been starstruck? Have you ever met a business leader? I mean, those three alone, Elon, Bill Gates, and Warren Buffett. Okay, let's park those three because I'm telling you, I don't know how I'd be able to carry off an interview with those three. Were you ever starstruck by anyone else? Or by anyone, full stop?
I think as a I know why you're asking that question, but I think as a journalist, your job is
Mm,
not to be starstruck.
yeah.
Your job is to talk to these people, um, as your, I don't want to say peer, but your job is to stay grounded and
Mm,
to talk to whoever that may be. It could be, I've sat across from President Clinton and interviewed him at the Clinton Global Initiative. President Jimmy Carter, I sat across. He was one of my first big interviews when I was at the
wow.
Financial Times. And it can be very intimidating, but your job as a journalist is to stay
Mm,
grounded and do your job. So, so I guess that's my.
yeah.
I'm not trying to not
Great.
answer your question, but I
Well,
do think
it's the right answer. It's
right.
like asking a surgeon, "Hey, were you nervous during my operation?" The only answer you need to hear is, "No, I wasn't one bit nervous. It's all fine." You need that from a journalist. I should have asked you this yesterday so I could learn from you. But how do you prepare for an interview with such a high-profile business leader? Are there any particular methods you employ to ensure a deep and meaningful conversation with the people you're sitting opposite? When you sit opposite Jimmy Carter, there's a whole world of conversation that you can dive into.
There is, and you have to make sure as a journalist that you do your job, which is that you also do the research ahead of time. So the best interviews I've had are the ones where I spent the most time, learning about the person, learning about the news that affects that person or that person affects, what their industries or their, whatever news that they might generate with their comments. Um, so a lot of the pre-work I think helps the actual interview
Mm,
itself. But I
yeah.
think that once you sit in that chair, the research is there as your background, but what's really important is that you listen.
Mm,
I think listening, has been one of the one of the keys that has helped me distinguish myself as an interviewer, is to really sit there and listen, because oftentimes it's not so much the first answer they give you to your question, it's the follow-up that you ask that
mm,
generates the most interesting answer. So you really have to sit there and pay attention, and ask that follow-up that the audience wants you to ask.
yeah.
So it's really paying attention, being there present, being present during that interview that I think really makes a great conversation.
Yeah, it's a great point. It's a bit like on a letter. The PS at the end is usually the most impactful part of the
Yeah.
correspondence. You can't just PS that to me. It leads on to the next question. So you in your career, which we'll dive into in a moment, you have a very unique view into the intersection of media, finance, and technology. Where do you see the most exciting opportunities for innovation at that unique intersection?
Yeah, I think that's a great question. And it's a very hard question to answer, because you could go in so many different directions. I mean, I've been lucky, I can't believe I'm now at of this age where I've seen the media industry, go from analog to digital. When I started, content was, on television, on radio, on newspapers. And, largely it was the organizations that created the content. Now you're at the point where it's really, people that are generating the content. It's influencers, it's people like you, Emmett, that are really having an impact on listeners and viewers. As much as I would argue, a CBS or a Disney or whoever, and that's an increasingly important. You as influencers and content creators are increasingly important to the new generation of
Mm,
viewers and listeners and media consumers. And I think that's kind of where I think, media and technology and finance, are going, which is it's really all about the customer. It's
yeah, yeah.
whatever can maximize that lifetime value of the customer and retain that customer. That's where the innovation is going to happen. So,
Mm,
um, it could be anything from, and you're starting to see this already, like, having content directly reach commerce. So, you're watching content and you're directly buying off of that. I mean, you're seeing that on TikTok already,
yeah, yeah,
but that's going to be everywhere soon.
yeah,
So,
yeah.
so I think the innovation is all, always going to happen around, how to maximize that value of that customer, and which to me means, more and more customization, like new, information that's customized to your interests. There could be dangers around that. I mean, we've seen people go down rabbit holes to very bad consequences, but overall, I think, having content customized to you is a good thing.
Oh,
Would you?
yeah, it's great. Even like when you think of Duolingo, which I'm a huge fan of, they recently implemented AI and it's now sculpting lessons around my pace of learning. So it's kind of like augmenting content, if what I'm hearing is correct, around the end customer, the end point. And this kind of open source approach to information is really the way of the world. Is that what you're saying?
Yes, absolutely. I mean, when I first started out, excuse me, in media, content was king, and it
Yeah.
was all about content and how much content, could be, uh, it was content that really drove the business model.
Mm,
I think content is still important. I would call content the queen now, and I would say the
yeah.
customer is king. So
Yes. Yeah.
it's really about what the customer wants, and that's where business models are being built around is customizing to, excuse me, to the customer.
Yes. So speaking of business models, I'd like to talk to you for a moment, Betty, about something that's close to both of our hearts, which is EdTech. Can you tell me a little bit about Radiate? What was it? What became of it? And what did you learn from it?
That was like my third child. So
The first two are human beings, I presume.
yes, the first two are twin boys who are now in college. So I'm happily an empty nester these
Oh,
days.
great. Congrats.
But I did start, yes, I started Radiate in 2016.
Mm,
And, I've always been a big believer that, to the point of, customizing and retaining, customers or viewers or listeners, so to speak, you have to deliver content to them that gives them a return on the time that they invest in it. So, people watch content for all different reasons. Most of us watch content for entertainment purposes. It kind of helps us, forget about our troubles of the
Yeah.
day. It's enjoyable. But then a portion of us watch content to learn, and it gives us, a return on that time that we invest. People listen to your podcast and read your reports because it gives them a return. They learn about stocks they wouldn't have learned, and it keeps them coming back. And I, firmly believe that I firmly believe that in that kind of content, in both areas, but I think particularly in learning content, people will pay for that, and
Mm.
they will pay a premium for that content. So, with that in mind, I started Radiate because I firmly believe that people were looking for an easier and more enjoyable way to learn management and leadership skills. We have this whole cohort of millennials um, who, and by the way, that they've obviously grown older and they're now in more management positions. But at the time in 2016, they were just emerging as leaders, as managers, as first time managers, and they have a lot of questions. They have a lot of problems to solve, and the easiest way I thought to do that was to deliver them videos. That videos was a way for them to consume that content really easily. So we interviewed 100, more than 100 CEOs, and it was everybody from Tim Armstrong, Ariana Huffington. We even had people like Michael Magic Johnson
Wow.
join Radiate, and they taught their own leadership and management lessons. And we made the video super short. So, less than 2 minutes, because we know all of us have ADHD these days and we can't pay attention for more than 2 minutes. Short bite size, we call them snackable videos, and people
Yeah.
could watch them. And in less than 2 minutes, they could learn a little tidbit of a lesson on leadership and management and apply that to their own lives. It kind of, if I circle back to my prior answer, it was very similar to what Elon Musk taught me without realizing he was teaching me anything. His story about the fear of regret was a micro mentoring moment for me. And so what Radiate became was sort of a platform to deliver people micro moments of mentoring in different areas. And we created this library of these videos, of over 2,000 of these videos, and we started categorizing them and giving people journeys, how to become a better manager. And then in 18 months, lo and behold, we got acquired by Intercontinental Exchange, which is one of the largest financial tech companies, owns the New York Stock Exchange. Still remember that phone call from the CEO, and I thought I was dreaming. He made me an offer I couldn't refuse.
Wow.
Next thing you know, we've sold the company, and I'm at the NYSE.
So tell me, before we talk about the NYSE, is that content still out there? Is it still available?
It was available for a while on the
Mm.
NYSE website,
Yeah.
and it became absorbed, and it grew into other types of content that is
Yeah.
now available by the NYSE. So it's not available anymore as Radiate,
Yeah.
but there are parts of those videos that are in the current videos that are being offered at the NYSE, and the content. I mean, people don't really realize this, but the NYSE generates a lot of content about business, about leaders, and so it's all part of those offerings.
So you went into the NYSE post acquisition where you took a very, very serious job. And a few years ago, my co-founder and I did what was known as the IPO Ready program at the Irish Stock Exchange. And it was in collaboration with the New York Stock Exchange. And what kind of annoys me is we didn't get to speak with the executive vice chair, which at that time would have been you. So being as you're here, I'd like to ask you a couple of questions about that. And I guess first is, what observations do you have about the pace of new IPOs, or at least when you were in that role? And what stage are companies at today when they decide to float in comparison to when you're at the springtime of your career as a young journalist?
Yeah, it's an interesting question because we've definitely been. I mean, I've tracked the IPO market. Even after I've left the NYSE.
Mm.
I started my own SPAC, and so we were very closely monitoring what was happening in the IPO market. It's not a surprise that IPOs have slowed down dramatically because the markets themselves have been very volatile. There's
Mm.
a lot of uncertainty. And, as you very well know, Emmett, because you follow this so closely, uh, the uncertainty really causes action to slow down, and investors don't like uncertainty. And so until there is a clearer view on what the Fed is going to do, it's very likely that things like IPOs, are going to continue at this sort of slow pace. It's going to be select companies that go public, but not this huge wave of IPOs that we saw, in 2020, and up until, the early parts of 2021. Um, but that doesn't mean that there aren't companies out there that are preparing to go public. I mean, going public is one of the, I think, one of the best ways for companies to, I think, to me, I think of most companies ought to be looking at the public markets, as
Yeah.
a final exit. And the reason why is that I look at it from the investor point of view, which is, private companies are generating wealth for a select group of investors, for private institutional investors. We should give the opportunity for mom and pop to be able to participate in some of our most extraordinary companies. And to do that, they need to go public.
Hmm.
I also think going public really, it's like bringing companies into the sunlight, and you can't fake it. Like, you can't fake, and I'm not saying private companies are fake, but what I'm saying is that you can't fake your numbers, as a public company. You certainly can't do it for very long without getting caught, because I
Hmm.
think, there is this level of transparency, and there's this level of regulation, that does ensure and protects investors. So I do, I drank that Kool-Aid when I was at the NYSE. I do firmly believe that, that our companies should be public. Um, but like I said, I think there's a pipeline of companies that are, that are ready to go. I think that, companies that want to go should be preparing. And that means, you prepare for an IPO years before you actually do it. You have to have audited financials, going back several years. It's best to have a CFO who is public, who knows the public space. To have a board that is a professional board, um, a management team that, that knows the public markets. Like, there's a lot of preparation ahead of time. And that usually doesn't happen, I think, until after a company raises, maybe after a Series C, going into
Hmm.
Series C. And, that's usually when I think a company has product market fit, has
Yeah.
enough revenue to justify being public, has a pathway to profitability if they're not profitable already. Those are
Yeah.
some of the things to be thinking about if you're an entrepreneur now.
I really want to dive into your SPAC story, but before we do, I just want to touch on something else, which is when you were in the NYSE, I believe you set up the NYSE Board Advisory Council, and it was made up of companies like Goldman and Coca-Cola and Procter and Gamble and Uber and so on. Can you talk to me just for a few moments about the future of boards? Because I think anyone who's involved in a business or involved on the board of a business can see in front of them very necessary change. And I'd love to just hear your thoughts on that.
Yeah, I was and I am a very big advocate of diverse boards. And I don't just mean diverse in terms of race or gender, although that is, that is the most obvious, um, sort of first step for
Hmm.
for many boards. But it's also diversity of skills and backgrounds. And I really do think that, as boards continue on, and they, look to replace their members, that, that management teams, that CEOs, that chairs of boards are going to be looking more at skill sets of new board members. And I think some skill sets are going to be more important than they were in the past. Corporate reputation, given how, how big social media is these days, and how people, get their information from, from social media. I think managing your corporate reputation is going to be more and more important. And so people in communications or marketing, might become, maybe joining boards that normally they may not, have been
Hmm.
considered for. And then obviously, people in technology, And we've talked so much ad nauseum about AI and and the metaverse and things like that. I think people who do have that knowledge base are going to be sought after, particularly
Yeah.
from boards that belong in more like legacy industries, so you're thinking banking or energy or, whatever, whatever industry that's not, normally associated with technology. So I think it's finding people with those skill sets that I think are going to be, as important as the people who traditionally now are on boards who are overseeing compensation and obviously, executing their governance duties.
Yeah.
So that I think is going to be a continuing trend for boards.
Excellent. So just 2 years ago, I think, or 2.5 years ago, you founded a SPAC, D and Z Media Corporation. Where did the name come from? Can you tell me the story about the SPAC?
Well, I'm about to embarrass my kids very much. This was not terribly creative, but D and Z are the first initials of my two boys.
Well, it's no better name, so that's excellent.
So they have that honor, but it was really sort of like, what do I find the name? Okay, let's just do that. It was very maybe one of my least creative endeavors,
Well,
but
it's supposed to be a short shelf life name. You're meant to merge with something and then kick that down, you know? I got
exactly.
it. So
Um,
tell me about it. How did it go for you? Because really, SPAC was the hottest trend before AI was in fashion.
yeah, SPACs were a very hot trend. And actually, when we were at the NYSE, or when I was at the NYSE, in 2020, we started seeing more and more SPACs list on the exchange, and it kind of piqued my interest, that it is, and it still is to some degree for some companies,
Mm.
and a more seamless way, a quicker way to get to the public markets. And these are, particularly for earlier stage companies. Unfortunately, so we launched our IPO in January of 2021, and that was, I would say, probably the peak of the SPAC boom. And our SPAC was 10 times oversubscribed. We raised $288 million. And literally, timing is everything. 6 weeks later, the SEC came out with some rules that really put a big burden on SPACs. And then after that, the Fed started raising rates, and the markets became extremely uncertain, and everything started to really fall apart. So we still hung in there though, and we talked to probably, I don't know, over 200 companies, and we signed 3 LOIs, and we were very, there were definitely a good number of candidates that we really wanted to take to the public markets. But unfortunately, as we were saying earlier in this program, that investors hate uncertainty, the markets hate uncertainty, and it's very difficult right now to raise capital.
Mm.
Um, and so we decided, at the end of the day, or I decided really that you know, we really want to take a quality company that deserves to be public. And if we can't find that, then we're going to return everybody's money. And so, I wanted to, my reputation is very important to me. Our reputation, we had a world-class board. We had people like, Brian Grazer on our board, and ICE was a financial backer of the SPAC. And, we had to put our name and stand behind the company that we were going to take public. So I really wanted to make sure that it was a company that we knew was going to be a public company for the long term. And at the end of the day, we decided that the best course was to return everybody's money and see how the markets play out. And we'll see in the next 12 to 18 months. But in the meantime, I think I learned two really valuable things out of this journey. And one is that even at the NYSE, you're still sort of a third party observer to companies that are going public. You're helping them, you're in partnership with them, but you're not really like, day to day, in the trenches with them. When you're a company that's merging with another and going public, you are in the trenches with them. And so I got to see up close,
Mhm.
and experience the IPO process, essentially the IPO process, in real time with various different companies. And so that is a wealth of knowledge that I can bring to companies that I'm advising now, and public company and boards that I'm sitting on, and company startups that I'm advising. I can bring that knowledge to them. The second thing I learned is that when you raise $288 million, everybody will answer your phone. So whether you're a man or a woman, you get a seat at the table when you've raised a good chunk of capital. And that really sort of opened this view of mine, or sort of enhanced this view of mine, that women, I think, really, not only are we important consumers, but we need to be important investors. We need to be capital allocators, and that's at the institutional level. Whether it's managing portfolios, but it's also at the retail level. Women are still far behind men when it comes to investing, and we have to have, if we want a bigger voice in business and in this world, we have to own that capital. And so, that has become kind of a personal passion of mine, or a life
Mm.
purpose, which is to get more women to invest.
And no better passion and no bigger goal, I have to say. And before we move off the subject, hats off to you for your integrity with what you did with your SPAC. I only wish other promoters had had the same inner voice as you had, and the same sense, because honestly, I think there's very few active investors who in the last 2 to 3 years were not seriously burned by the good word of a promoter, or what was purported to be the good word of a promoter. But anyway, that's that. So before, let's bring it up to a Zen level, Betty. You are sitting at the hub of the world's capital system, and when you're in the New York Stock Exchange, it was the crosshair. What have you learned in your career, and in all your years of discussing effectively matters to do with money? What have you discovered about people's relationship with money?
Yeah, that's a great question. I think people have a complicated relationship with money. I think
Yeah,
um, I think that people often let fear and greed drive their decisions around money. And I have found that anytime I let fear or greed drive my decisions around money, I 100% regretted that decision or that action.
yeah,
So, my inner compass now is that I check in with myself, anytime there's an investment, or any decision I make, really, even, a life decision. If it's out of fear or out of greed, I'm out. I don't make that decision.
that's
Um,
great. It's a
I think
great barometer to have.
it's taken a lot of mistakes, Emmett, to get to that barometer, but I would say that I
Yeah,
finally
you
have
and me
got
both.
I've got an inner compass there. I think the other thing also is men and women have different relationships with money. I think, I hate to generalize, but you need to kind of have some generalizations.
Mm.
When in many ways, when when you've got a view on
Yeah,
this. I think men, people often talk about how men are more risk takers, and I think to a large extent that is true. I think men also approach investing like it's a sport. They're betting on stocks. Maybe it's a little bit of gambling, or it's sports betting, like they're betting on. And you saw that, of course, with the meme stocks. I mean, that was kind of betting to an extreme. But mostly that was men doing that. So I think
mm, mm.
I think
Oh
there is
yeah,
this element of like that the stock market is a game, and I see that, by the way, with my own sons. They got interested in investing early, and for them it's a little bit like it's a video game for them. It's a sport. But I think for women, it's not, that doesn't appeal to us. We're not that might be appealing to some, but not to a majority of us. For us, investing and our relationship with money is more around, how do we protect our assets? How do we, is the money that we're investing, is it going to grow and be there for the long term? And so, we're looking for more safety than we are
mm,
looking
mm.
for risk. So, I think so it's two very different intentions when it comes to that relationship. And I do think, generally speaking, women are a little less, they're more risk averse.
Mm.
So but I think the challenge for women and money, and women and investing, is even just getting to do something in the first place. There's
Yeah,
just a
yeah,
great inertia. It's okay, I know I need to do it, but but how do I actually do something? That inertia is extremely powerful. And I think, inertia is probably one of the most powerful forces in the universe that prevents us from, getting what we want, whether it's getting what we want with our money or getting what we want with our lives, with our careers. Like it's, a large part of it is just getting over that inertia.
I think they're truths that would resonate with everyone. And when you say generalizations, or we talk about generalizations, they apply. Anyone who's listening to this show knows that on average, the females in their life are a little more risk averse than on average the males, and it's just a truth that cuts through. And the unfortunate thing, as you said, is that it's like one's strength becomes one's weakness, and it's a real shame that more women don't participate in investing, because that very strength of a conservative nature will lead them
Yeah.
on to what you will say are more stable, lifelong stocks that they can buy and own until they're in their 80s or 90s. And I think it's a great pursuit that you've got.
Yeah, and
Betty,
I
sorry.
will say, Emmett, if I could just add this one
Yeah.
thing, what is interesting, and what I found in researching this, and I'm sure you found this too, is that when women do invest,
Mm.
they slightly outperform men.
Oh yeah, they
You know,
do. And Charles Schwab, my co-founder John spoke to Charles Schwab, the person, when we were founding this business, and he showed John the data that women outperformed men. And the
yes,
only cohort that outperformed women were the deceased, because they didn't touch their portfolio at all. And so it's this kind of not. It's, as you say, gamifying or making a sport of your investing and buying a business because you believe in it, accepting that the share price will move, but you're really in this for the long term to create wealth. And I think that a woman's brain is more naturally wired for that behavior than men. But that's the great opportunity for you, Betty. I can't pursue that. Look at me.
we'll let you in, Emmett. I think
Okay. Okay. Look, last question before we let you go. I'd like you to reflect on your career and your experiences and ask you, what's the most important lesson that you've learned that you'd pass on to the next generation of journalists or business leaders, or indeed your two sons?
Well, so I've thought about this, because I've been asked this before about, what are some lessons to pass on to journalists, and also, as you said, to business leaders, and I've come around to a few of them actually. So one for journalists in particular. I think if you aspire to be a journalist, you aspire to be a content creator, finding your niche is extremely
Mm,
important. I think finding your niche and going all in on it. That's kind of how I started my career as a journalist. I was doing business news when nobody wanted to do business news. It was, we didn't have the Elon Musks of the world in the 1990s. It was all very, people didn't
mm,
really think business
yeah,
news was that sexy. It may not be
yeah.
that sexy right now, but it's certainly sexier than it was back in the 90s. And my niche was really focusing on the capital markets, the bond markets, actually in Asia. That's how I started off, and I made a name for myself in this sort of very, kind of tiny corner of business news. And so I think
Mm,
finding your niche is super important. I think just overall, in terms of like, what is the advice that I would pass on to my own kids and to the younger generation is, I think one is really, it takes, and this is something borrowed from Buffett, it takes many years to build your reputation and only 10 seconds to ruin it. So, really guard your reputation and
mm,
continue to nurture that, and, and understand that, in a moment it could go away if you do one bad thing. So I think your reputation is extremely important, and I think it takes years and years to build that. And part of building that reputation is to be a consistent person. Be consistent, be kind, and also, remember to say thank you.
I love that. Consistent, kind, and gratitude. And I couldn't agree more. Betty Lou, it's been my absolute pleasure to chat with you here today. I hope we can entice you back again for another conversation at some point in the future. Thank you for joining me.
Thank you, Emmett. Great interview.
Lastly, before we finish up, a thank you to our friends at Vodafone Business. If you're a business owner in need of a leg up or getting started on your digital transformation, get yourself over to Vodafone V Hub today to book your appointment. You can find the link in the show notes for today's episode, or simply just Google Vodafone V Hub. That's it for today's show, folks. I really enjoyed listening to Betty and Emmett's conversation. Remember, if you have any questions you'd like answered or elevator pitches you'd like us to tackle, simply just get in touch. You can find us on Twitter at MyWallStreetHQ, on TikTok at MyWallStreet, or simply just email us at pod@MyWallStreet.com. If you're enjoying the show, leave us a review, share us with your friends, and we'll talk to you next week.